Hello everyone. So today I'm gonna explain some problems under income from other sources. So here Mr. Raghu submits the following particulars of income from other sources for the year ending 31st March 2019. Family pensions from Government of Karnataka rupees 1,20,000. So in the case of family pension, for the calculation of family pension under income from other sources, we have a separate calculations, that is nothing but calculation of taxable pension. So first we need to find out the amount of deductions, the amount of available exemptions, that is nothing but 1/3 of the pension received or maximum amount of rupees 15,000, whichever is least. So first 1/3 of pension received, amount of pension is 1,20,000, 1/3 will be 40,000, maximum amount of rupees 15,000, whichever is least, that will be exempted or deductions. Remaining balance will be taxable amount of pensions. So in this case, for the family pension from Government of Karnataka, so 1/3 will be 40,000 and maximum is 15,000, whichever is least 1 lakh is exempted and the remaining balance is 1,05,000. So therefore 1,05,000 is the taxable amount of pension. Next, interest on post office savings bank account rupees 3,000. It is exempted because it is under the limit of exemption of rupees 3,500. So the assessee can claim up to 3,500 as exemption regarding the post office savings bank account interest. Interest on 90,000 10% debentures listed of TM Limited Company. So it is a kind of non-government securities or commercial securities. Moreover, they have not given any information about tax-free or less tax. In the absence of nature of securities, it should be considered as less tax securities. Then next thing we should consider more careful is when they have given amount of investment and rate of interest, no need to be grossed up on the interest. Only we should take interest in the case of less tax. In other case, if they have given amount of interest for the less tax securities, that should be grossed up. So here amount of investment and the rate of interest is given or given. So in such case, we need to just find out amount of interest. No need to be grossed up because it is already grossed up. Next, winning from lottery net rupees 2,80,000. It is a kind of casual income. They have given net, so we need to gross it up. So for the casual incomes, grossing up of TDS rate is 30%. So grossing up will be 2,80,000 amount of winnings into 100 divided by 100 minus 30, that is 70. 4 lakhs is the total amount of lottery winnings. The next, he lives in a rented house paying a rent of rupees 6,000 per month. He has sublet half of the portion for a rent of rupees 4,500 per month of this house. So here the assessee has living or residing in a rented house for paying rupees 6,000 per month. Half of the portion of this house was given to the sublet to the another person or subtenant for rupees 4,500. It is a kind of income from subletting of house property. So in such case, calculation will be income from subletting of house rupees. He was paid or he has given house half of the portion of the house for rupees 4,500 per month. So he will be receiving 4,500 into 12 months, 54,000. Then he had paid a rent of rupees 6,000 per month for the entire house. So that is payable, that is expenditure, or that is a payment made by the assessee. In such case, he will be receiving half of the rent the rent for the half portion of the house from the subtenant. So therefore, the rent must be deductible only for the half portion. That means in simple, the tenant or the assessee is paying only rent for half portion. That means 6,000 into 12 into 1/2, 36,000. The balance is the taxable income from subletting of house. Next, dividend from Tata Company Limited rupees 9,100 net and paid rupees 250 for collecting dividend. So it is a kind of dividend from domestic company that is exempted. Next, royalty from books return rupees 58,000. and he incurred rupees 1800 towards stationery and others. So it is another sources income. So first we need to take a royalty from book return rupees 58,000. Any expenditures incurred on earning these such kind of incomes will be deductible 1,500. Balance will be taxable income from royalty. Then next, interest on loan given to friends rupees 9,000. It is taxable under income from other sources. A remuneration from article published in a journal. It is also taxable under income from other sources. Cash worth rupees 10 lakhs was found in a bank locker and sources of which are not known. So it is nothing but undisclosed income. So there is no proper information or there is no proper reason for earning this income. That is, such incomes are called as undisclosed incomes. So any income which has no sources, which has no information of rising of such income, that will be undisclosed incomes. It is taxable under income from other sources. Next, interest on fixed deposit in a bank rupees 22,000 gross. So interest on fixed deposit in a bank rupees 22,000 gross. So it is nothing but it is a kind of income. Moreover, they have given gross, so no need to be grossed up again. So if the interest on fixed deposit is exceeding rupees 10,000, that must be grossed up by 10%. So here they have only given the gross amount. So in such cases we need to take total amount of interest. So after adding up of all these taxable incomes, the balance is to be called as taxable income from other sources. So here be careful with the family pension. So for the family pension, we have to find out the amount of deductions and taxable pensions. So these calculations must be done for the finding out of taxable family pension. And next, so you will be having two illustrations. So please kindly go through this and find out the taxable income from other sources. So I'm going to explain the transactions. So here Mr. Ramanarayana submits the following particulars of his income from other sources for the year ended 31st March 2019. Royalty from book return rupees 40,000. Expenses incurred for this purpose is rupees 4,000. It is taxable. Expenses must be deductible. Interest on fixed deposit in a bank rupees 30,000 gross. It is taxable, but no need to be grossed up because it is already grossed. Family pension from Government of Karnataka annually rupees 48,000. So as I said earlier regarding family pension, first we need to find out deduction amount, then taxable pension with the calculations. So winning from horse race rupees 70,000 net. It is a kind of casual income. They have given net, so it should be grossed up by 30%. Rent from subletting of house rupees 3,000 per month. Rent paid to owner rupees 2,000. Repair expenses rupees 400. So here it is nothing but income from subletting of house. So in this case, the income from subletting of house will be 3,000 per month. Then these two are payments 2,000 and 400. So these two must be deductible from the subletting of rent. So here they have not given per month or per annum. So in such case, entire amount must be deductible from the income from subletting of house. The next, cash worth rupees 90,000 was found in his private locker, the sources of which could not be explained. It is kind of undisclosed income, that is taxable. Winning from lottery net rupees 1,40,000. Purchase of lottery rupees 150. So it is a casual income. They have given net balance, so that should be grossed up by 30%. But here any expenditures incurred on casual incomes should not be deductible, should not be allowed as deductions. So only we should take income. The next, remuneration from articles published in magazine rupees 4,000. It is taxable under income from other sources. So in the next, Mr. Arun, a resident of India, has furnished the following incomes for the previous year 2018-19. Calculated his income from other sources for the assessment year 2019-20. Winning from crossword puzzle rupees 9,914. It is a kind of casual income. So they have not given any information about net or gross. In such cases, it should be considered as gross amount. So no need to be grossed up. Entire amount must be taxable under income from other sources. Royalty from textbook written by him rupees 45,000, admissible deduction rupees 12,500. So it is taxable under other sources. Rupees 12,500 is expenses incurred for earning rupees 45,000. So it is deductible from the income. 8% interest on 40,000 debentures. So it is a kind of non-government securities or commercial securities. So they have given amount of investment and the rate of interest. Moreover, it is less tax securities. So no need to be grossed up on the interest. Only we should take interest 40,000 into 8%. 10% interest on 80,000 Karnataka state government bonds. It is a kind of government securities or government bonds. In such cases, it is less tax, so we should take only the amount of interest. TDS will not be allowed or grossing up will not be allowed on the government securities. He has invested rupees 30,000 in 7% capital invested bonds of Government of India and received interest for the year. It is exempted under income from other sources. Any investment made under 7% capital investment bonds of Government of India, that is completely exempted. Next, 2,000 as interest on bank deposit. So it is taxable, but no need to be grossed up, because if the interest on bank deposit exceeding rupees 10,000, then only it should be grossed up. Otherwise, it should not be grossed up. Entire amount will be taxable. Dividend from a domestic company rupees 8,000. It is exempted. And the last one is income from undisclosed sources rupees 10,000. It is taxable under income from other sources. So find out the taxable income from other sources. Thank you.